Hi everyone, thank you for having us. My name's James Van Straten. I'm going to be moderating the panel on bridging the gap, ETFs, institutions, and the future of digital assets. I'm the senior analyst at CoinDesk, and I'm also an advisor to a UK public company called CoinCilium. With me is Peter Lane and Juan Leon. So do you guys just want to introduce yourselves?
Sure, thank you very much. I'm Peter, I'm CEO of Jacobi Asset Management. We are a Bitcoin digital asset manager. We launched Europe's first Bitcoin ETF, and we're just trying to, as the panel says, we're trying to bridge the gap between Bitcoin and crypto and traditional finance to allow the old world to access this exciting new world we're all part of.
Hello everyone, Juan Leon, Senior Investment Strategist at Bitwise Asset Management. We are a global crypto asset manager based out of San Francisco, New York, and now have a presence in Europe as well, managing 15 billion since 2017. We have the largest and longest running index crypto fund, and now a series of solutions that span Bitcoin and Ethereum ETFs, private funds, SMAs, and other types of vehicles in order to provide investment solutions for investors looking to access the opportunities in crypto.
So if we kick off with the institutional adoption within crypto, we probably start January 2024 with the Bitcoin ETFs. So maybe Juan, you can start being on the front line. What's happened since then, and how actually the launch went on almost 18 months ago?
Yeah, the Bitcoin ETFs have been an incredible success. They've been the fastest growing category of ETFs of all time. They gathered collectively 35 billion in the first year in inflows, which was an incredible achievement. And we at Bitwise were very excited going into the launch. We had applications with the SEC since 2018, pursuing this ETF vision, and we've been running an annual survey of investors and financial advisors, taking their attitudes towards crypto for a number of years. And leading up to the ETF launch, one of the statistics that stood out to us was that 88% of financial advisors wanted to get exposure to Bitcoin, but couldn't because compliance-wise, they couldn't get access to Bitcoin directly. But they wanted the ETF vehicle. So we saw huge pent-up demand coming into the launch, and of course, the rest is history, and it's been a massive success that has unlocked the institutional opportunity for Bitcoin to the public, and really has given rise to this institutional adoption wave over the past year and a half.
And Peter, in the UK, it's a much more different landscape. So could you just tell everyone about the UK and the regulatory landscape within the UK?
Yeah, well, unfortunately, the UK is years and years behind America and other more progressive areas in the world, like the UAE, Asian markets, much more progressive than the EU and the UK. Just to quickly touch on the institutional thing, I think the institutional thing is twofold in terms of institutions are now creating products within blockchain and crypto, which i.e. like your ETF, but also that then leads to institutions actually investing. And I think that's two separate strands of it, which is the institutional movement. And so I think you can't really have one without the other, because most institutions wouldn't go and do something unless it was with an institution providing it. And I think when you've got the likes of BlackRock, Bitwise, Fidelity now creating products, that then puts a bit of a rubber stamp on, yes, Bitcoin or crypto is going to be around for a while now, and that then allows institutions to actually invest in it with their own capital. So I think that's now slowly spreading around the world. It's much better here than it is in where we live. And I just think as long as we can maintain there's no disasters like there has been previously, which has spooked institutions away, like for instance the FTX crash, that was obviously, institutions were just warming up, they saw that, then they ran for the hills. So as long as we can avoid any disasters in the next couple of years, and we can have an American administration that are really pushing the boundaries on clarity and adoption of digital assets, that will generally just spread around the rest of the world. And I think if we can push on from this and take digital assets to the next level of just weaving it into everyday financial industries, then it just becomes normal. In my mind, it won't even be that exciting or exotic in a few years' time. It will just be boring and normal. It'll be part of every aspect of your investing life. And I think once that happens, then it's a mainstream thing. If you're investing in Bitcoin or crypto via indexes or ETFs or multi-asset portfolios without you realizing you're even doing it because your fund manager's picking it, that's when it's fully adopted. Because like, if you think of 401ks, like we'll touch on this again in a bit, but if there's a multi-asset portfolio in a 401k, investors probably don't even know the ins and outs of everything they invest in. So passively, they're invested in stuff like Coinbase and maybe Strategy getting into the S&P 500. How many people now in the world investing in them passively without even probably knowing it?
Absolutely.
That's when it's mainstream and it's fully adopted, when it's getting investment without even trying.
No, I completely agree. So, no, could you then just touch upon the regulatory landscape within the UK and why it's so different to the US for anyone that doesn't know?
I think it's unfortunately probably maybe government-led, and the government aren't really that interested in crypto and Bitcoin. The regulators seem anti-crypto and Bitcoin. Maybe it's because they're defending their little moat of traditional finance to control the state, etc. But now you've got a president in America that doesn't really care about the deep state. He wants to just push on and seemingly make digital assets and crypto available for everybody. That is a situation whereby hopefully he can sort of bring the hammer down on institutions trying to keep control. And I think if you can control, if you allow a decentralized currency, well, then you lose control of currency. And so I think the UK is stuck in maybe the past quite a lot. And I think if you look at, if we go historically, the UK used to run pretty much the whole world. So I find British businesses, people, somewhat complacent, because we've got Great Britain. Like, it's not really that great anymore, but it used to be. So you don't really need to push on. You don't need to be innovative. You don't need to drive. If you look at American culture, everybody that turned up to America a few hundred years ago from other parts of the world, well, that's a very bold act in itself. So culturally, they're bold. Culturally, they try and achieve more. Culturally, they try and get on. And it's a well-known thing, the American dream, right? And Americans seem to push on for that, whereas Europeans seem to be sat back thinking they know better when they just end up becoming the losers.
So Juan, in these past 18 months and then with the Ethereum ETFs, which have also been hugely successful, has this blown away your expectations, Bitwise's expectations, or is this kind of the flows and the volume that we've expected to see?
Yeah, Ethereum ETFs got off to a slower start. Naturally, Bitcoin has been around longer, and in terms of institutional adoption, institutions are just coming around to understanding the opportunity with Bitcoin, and they're only beginning to explore what Ethereum is. So we knew that it was going to be a slower start for Ethereum ETFs flows, but this year they've really picked up, and we're now, I think, up to 10 billion in net inflows into the Ethereum ETFs, which also places them among the fastest growing in history as well. And you saw last year with Bitcoin ETFs, the demand bought by ETFs exceeded the supply of the Bitcoin network by something like a factor of 5, and you saw that reflected in the price action. This year, since May, that you've really seen the pickup in flows for Ethereum ETFs, the flows have exceeded the supply created of Ethereum by a factor of something like 30. And you've seen the massive price action in Ethereum as a result. So these ETF vehicles, via the institutional demand from investment managers, are really becoming a big source of demand for these assets. And we're very excited about that continuing, especially because even today, these ETFs are restricted in the majority of wealth platforms. They're still not allowed in some of the major wealth platforms like Morgan Stanley, like Wells Fargo, Merrill Lynch. Those institutions have been conducting due diligence that usually takes them 12 to 18 months to do. So we think the second half of the year, those institutions will start approving on their platforms, and that's going to drive an entirely new wave of capital into the ETFs.
Sorry, this is just one of the things I find fascinating, that even though people in America could have bought Bitcoin, the demand for Bitcoin ETFs was still absolutely through the roof. And so that's an amazing thing, because what it shows is it's the unlocking of a pool of capital, that demand is there, but it's strangled. So in the UK, for instance, we've had a ban on crypto products since 2021 in people's traditional savings accounts, like a pension product, a savings account. So the demand is massive, but there's no access to it. And so what I see is the unlocking of pools of capital is what's going to get Bitcoin and the other cryptos to their ultimate price action. Because if you take into account the 401k AUM that's now got access, in the UK there's 1.25 trillion just in the UK, which is a small little island.
Here in the US,
Yep.
here in the US, there's 10 to 12 trillion.
Yep, and only now that gets access.
Yeah.
If you look at the insurance industry, there's 50 trillion in insurance funds that can't touch Bitcoin or crypto. So these tiny unlockings of these huge pools of capital is an insane change. So if you just take into account, let's say the 50 trillion insurance funds, let's just say 0.5% of that goes into Bitcoin. Well, that's like quarter of the entire AUM of Bitcoin right now. And so the price action for me hasn't even started. When these pools of capital from traditional worlds get unlocked and can access Bitcoin and crypto, that's when that's where we get to the promised land.
Yeah, we totally agree with you. And to add on top of that, there are multiple structural forces of demand that are outstripping supply. There's the ETFs and what we were talking about, all those different buying groups that come. There's also the Bitcoin treasury companies, which we've seen huge demand for. And then we're seeing, we're starting to see at the sovereign level adoption. We saw Abu Dhabi establish a position in Bitcoin ETFs a quarter or two ago. We're seeing the
pension funds in the US.
Pension funds in the US. We're seeing state level strategic Bitcoin reserves outside of the federal level government. And I think this is going to snowball around the world as well.
Totally, and I think the investors there you said, they're all long-term holders. They're not daily traders. The treasury companies, they don't care what the price is. They're going to buy it, hold it forever. The pension companies, well, they're a long-term investment. Sovereign wealth funds, they're not going to be trading it, so that's a long-term investment. So all these people buying big-ticket buys now, well, they're not selling it. So that really dries up supply, especially the fact that they're already buying way more than the Bitcoin network can supply. But we'll see a dwindling of potential sellers and willing sellers. And so the price can't go anywhere but up, in my opinion, long term.
Yeah, you see it from the price action, but on the corrections, where we used to have huge drawdowns. The biggest correction that we've had this cycle, I think we've had 30% drawdowns. Yen carry trade in August 2024, and then the tariff tantrum back in March, April. And to me, that is so indicative of just supply and demand just meeting each other. And I haven't seen this cycle, like this kind of institutional bid that's been going on. It's quite incredible.
Well, yeah, I've never seen a bigger imbalance of supply and demand of anything in my life.
Yeah, and to your point, these institutional buyers also dampen the volatility of Bitcoin, which we've seen come down from what used to be 200% a year a decade ago to now in the 30 to 50% range because of these long-term buyers coming into the market. And a lot of them we work with a lot of institutions that are creating allocation sleeves for crypto in their portfolio. And so they have now a target allocation of 1, 2, 3, 4, 5%. And as the price rises, and that allocation goes beyond their target allocation, they sell that, which helps mute, the volatility on the upside. But then on the downside, they become natural buyers.
Yes.
If their allocation falls below their target, they're natural buyers. Whereas retail tends to, buy at the top and sell at the lows. It's a contrabalancing force that I think is dampening the volatility.
What is the average portfolio allocation that you speak with? Is it 1% that goes to 3%, or is it 3% that goes to 5%, or how aggressive is the allocation?
It's been increasing over the years as investors growing comfort and understanding of the asset class as they see regulatory certainty come in. Back a couple, 2-3 years ago, investors used to start at a 1% allocation. Now we're seeing the average allocation start at 3% and moving on to 5% in many cases.
It should start at 50.
Yeah.
And then recently, President Trump just did an executive order of digital assets and alternative assets being allowed in 401ks. Someone that's in the UK, could you just explain what's actually happened from that?
Yeah, that's a huge development that happened this week. Prior to this, there had been a determination by the Department of Labor cautioning against providers allowing crypto in their plans. It wasn't prohibitive, but it was cautioned against, and so many providers did not want to have a run-in with the Department of Labor and chose not to. So only a few providers had been providing up until now. But now, this week, the executive order really opens it up so that there's no restrictions, so that Bitcoin and cryptocurrencies are on par with other alternative assets, commodities, hedge funds, private equity, et cetera. It really puts them on even footing. And I think that's going to be an explosion in providers allowing either spot or the ETFs or both. And as we were talking about earlier, that's 10 to 12 trillion of assets now available to be invested at a meaningful percentage in crypto.
It's such unbelievable progress. Hopefully what they're doing here feeds its way into the rest of the world, and we can try and get to the level you guys are at.
And it's also quite interesting to see from a trading perspective that with the options market and all these treasury companies, that there's quite an interesting, I think the IBIT also had, I don't know the stats, and also MicroStrategy, their options outstanding is just absolutely colossal, and it rivals some of like the Magnificent Seven, and it's getting those traditional investors, if they don't want access to Bitcoin or crypto, that they have these Bitcoin treasury companies or these ETFs for trading options as another vehicle to get access to.
Yeah, absolutely. The options market has exploded in volume since the start of the Bitcoin ETF, or since they approved options on the Bitcoin ETFs. Now they're approving it on the Ethereum ETFs as well, and of course you can do it on the equities of the treasury companies. So the derivatives market is really growing leaps and bounds. That helps with price discovery. It helps with liquidity in the system as well. The other thing I find really interesting about the treasury companies is they're really monetizing their capital structure to provide different type of exposure to the asset to investors. You know, if you are a fixed income investor, you can now invest in the debt facilities of these companies and give them exposure that way. But if you want an income stream, you can do any of the preferred, like MicroStrategy has different tranches of preferreds that you can offer. Or if you just want to play the volatility, the levered volatility via the common equity. So it really is giving a lot of different types of exposures for investors.
Yeah, it's awesome actually what they're doing. And what I think is quite a clear thing, and I think Saylor said this, or maybe it was David Bailey that said it, is that you need to take Bitcoin and crypto and take it to someone's door where they're comfortable. You can't say, this is how we do it, get used to it or don't do it. You have to create a product that's comfortable for that person, their risk profile, their requirements. And my background is in wealth management and financial planning, so I know very well that you need to understand who you're selling to, what they want to get out of it, and what their comfort levels and their needs are. And Bitcoin and crypto, given that it's historically volatile, most people are shit scared of that. So if you can create a product that suits their comfort level and you take it to them, that's how you get mass adoption, because the people that would be terrified to just come in on their own can now come in a more comfortable way. And what you generally find is somebody that starts doing something, get used to it, they get a bit more comfortable with it, well, their risk tolerance goes up because they get it, right? And so the more and more somebody gets into it, the more and more they want to do it, because it's a no-brainer in our opinion. And I think being able to package products up like the treasury companies are, and the innovative products that you guys are creating, like the Bitcoin standard ETF, for instance, that takes Bitcoin and crypto products to everybody's comfort level, and then that's how you get everybody in.
Yeah, and that mass adoption, we've seen the annualized, like realized volatility and the implied volatility absolutely just dampen. I think implied volatility is at a 2-year low. I think it's the same level as August 2023. And with the lower volatility, then you get mass people coming in and say, oh, I can handle and stomach that kind of volatility. But that means you obviously don't get those huge upside returns. So I feel like Bitcoin does go into that S&P 500 or gold kind of, maybe slightly higher to the upside and more to the downside, but as time goes on, I think that volatility will inevitably shrink. So just another, I think we've got 5 minutes. It's so how do you see this cycle playing out? Do you still believe in the cycle iteration? And for me, to starting this, Bitcoin hit an all-time high prior to the last halving, so there could be a thing that the 4-year halving or those cycle narratives isn't really a thing. So what's your guys' views on this?
I think we're getting new investors in, so I think it's natural for a new pattern to start. And I think if you look at the usual technology would be invented by the CIA, for instance. Then it would get into governments, then it would get into like countries, big institutions, then eventually retail would be able to benefit from it. But Bitcoin and crypto has been the other way around. If you think about the early adopters was cryptographers, the cypherpunks, freedom fighters, tech-savvy investors, then more traditional investors, and only now are the big-ticket investors coming in, like countries, institutions. So the big-ticket buys are only really going to start happening now. So I think that if I was a country, for instance, and I wanted to build a strategic reserve, well, I'd have a buy order set at like a 10% dip from wherever the price is. And then anytime it dips down, you swallow it up. And so I think that really will help bounce. And the treasury companies are a great example. Like Saylor buys every week regardless of the price. And he's just going to buy more and more and more. The treasury companies, as you well know, as you grow, your capacity then becomes larger to raise money. So the bigger you get, the more Bitcoin you can buy. Therefore, the bigger you get, the more Bitcoin you can buy. The bigger you get, the more you can raise, the more Bitcoin you can buy. So their purchasing power is exponentially growing. So it won't be long until even small treasury companies are buying massive amounts of Bitcoin. So the big ticket buys are only just starting. So I think, you know, if you were looking to build a portfolio of Bitcoin, if you're a country trying to buy Bitcoin, or you're a big corporation trying to buy Bitcoin, you just have a massive order set at a dip, and you would buy it, and it would bounce back up.
Yeah, I agree that this cycle is going to be extended past the historical 4 years for many of the reasons you said, including also that apart from these buyers into Bitcoin and Ethereum, you now see the SEC opening up the door for many other products to come to market, and there's filings for Cardano ETFs, XRP ETFs, Solana ETFs. If and when those get approved, that'll bring new buyers into the market. That'll continue to have capital flows into the industry. Another thing that has punctuated the 4-year cycle in the past has been major blowups. And I think with the advances in regulation this cycle, and more regulatory certainty, more protections, and more market structure, that'll prevent those things from happening, or hopefully it will. So I think there's just a natural structural demand, institutional demand for buying that will continue over the next couple of years, and I think that just extends the cycle further.
I agree.
And then we've also seen in the last week or so, as you guys have been saying, that the SEC versus the Ripple case is over. You've got the crypto-friendly Stephen Myron nominated for the Fed Board of Governors. So that's a trend that you guys expect to carry on seeing, just more and more friendly for the industry.
Yeah, I think it's an unbelievably friendly environment, especially in the USA, and I think that they generally set the trend for the rest of the world. And I think with this Trump administration being absolutely littered with Bitcoiners, I am unbelievably bullish that they're going to make sure that there's somebody that understands it isn't prejudice against crypto and Bitcoin in every major body that's got any say over the way the control of it goes. And I think if you've got, you know, Trump and his family making a shit ton of cash off of Bitcoin and crypto, well, they're going to carry on with that, aren't they?
Yeah, absolutely. I mean, you've seen the turnaround in the SEC with Paul Atkins. You've seen the different agencies come in as well. In the CFTC, there's a nomination for someone, Brian Quintenz, who's very friendly as well. You're seeing in all government. I mean, heck, we have a crypto and AI czar in the government administration. So I think this bodes well for the industry for bringing in market structure, regulatory clarity, and better investor protections as well.
And I think the other really, really amazing thing about the crypto czar is that if you look at his position in life, he didn't need this job. He gave up like $200 million worth of crypto to take this job. So he must really, really believe in it to be able to say, well, I'm going to give up probably becoming a crypto billionaire to then help everybody else move the industry forward. And if you've got, as we were saying before, if you've got collaboration between regulators, governments, and policymakers, the future can only get better. And the more clarity you get, and you would know as a regulated manager, all that you want as a regulated issuer of products is regulatory clarity. And I want to know, if I do something, are you going to come and shout at me or try and shut me down? Yeah. And what are the rules? And can I then play within these rules? And if I know what they are, they're absolutely clear, like they're becoming in America, the industry will just take off.
We've got 30 seconds. Can I get a price prediction from either of you for another, probably about the end of 2026?
Yeah, our house prediction at Bitwise is for Bitcoin to end this year above 200,000. And next year, it's anyone's guess, 250, 300? Yeah.
Yeah, I've been calling end of this year Bitcoin 200. depending on what, there could be some spark. Let's say, we have consecutive rate cuts in America, probably spark it, maybe go a bit higher. As long as there's no catastrophes, 2 to 220, I reckon.
Yeah, the macro headwinds, the macro tailwinds are there with lower interest rates, global money supply increasing. No doubt there'll be bouts of volatility. It's not going to be straight up, but I think we go higher.
If they commit to buying 1 million for the Bitcoin Strategic Reserve, 500.
Thank you very much.
Viva Las Vegas.
Thank you.
Enjoying Rare Evo? Then lock in your spot for next year right now. Rare Evo 2026 is already in the works, and it's going to be even bigger. More chains, more builders, more connections. Tickets are live. Go to rareevo.io/2026 to grab your early access pricing before it's gone. Don't wait. Be first. Be part of what's next. We'll see you at Rare Evo 2026.